Microphone check and screen share check, please. Awesome. Okay, here we go. Nightly strategy podcast for Tortoise Capital for September 8th, 2022. We'll start with market 150. Looking back 150 days. The little bit of recovery that we've been experiencing and looking for around 390 held today. We got a 1, 2, 3 entry. Yesterday was we had a WMB3 entry. Today continued that and closed just fractionally above 400. That's a key psychological level. We're halfway to the PSAR flip. The next target in line right there is the dragon. That's holding. 380 remains the absolute essential support level for this little rebound in order for it to be a COTA 2. But we actually got the RL30 crossing the baby dragon, so all systems go for today. Tomorrow is a Friday. We'll see how that works, and but it looks good on the long term. This is such a deep sell-off that there is a genuine swing opportunity should that hold. You know, if it gets to the previous PSAR and then through the dragon to the top around 430. So that's all in play. It's a tactical trade in this area between today's close and the PSAR flip. So that's the tactical trade. But if it can PSAR flip, then that's where you're thinking about a second position, and the market would have recovered. It has to get above 430 for this to be really interesting. But if we play our cards right and the river don't rise, then we should be able to earn money in this region to fund that and make this a really massive trade should it get above that level. So that would be good. On the market 30, the 30-day look back, now you can clearly see the 1, 2, 3 pattern. So in the 1, 2, 3 pattern, you have a swing low with the price. Then you watch the next bar, and we see where it opens, the low, the high, and the close. So at the moment of close on that potential bar 2, it has to close with a higher low. So if you have this second bar closes with a higher low, then and only then this officially becomes bar 2, and that officially becomes bar 1. But you don't know that that is a bar 2 until the moment of close, because right up until the moment it closes, this thing could reverse lower and then make a new low, in which case then this can no longer be bar 1. This is potentially a bar 1. So in the 1, 2, 3 methodology, bar 1 is always a tentative bar because it's made the lowest low. Bar 2 is tentatively bar 2, so that until it closes, as long as it hasn't made a new low yet, then it is tentatively bar 2, and then when it closes, you can definitively say, yep, that was bar 2. And so when it closed, we could look and see, yeah, here was the low, here's the higher low. That makes it bar 1, bar 2. And then bar 3, what you're looking for is wherever it opens, and you're looking for it to take out the high of bar 2 while bar 3 is live and dynamic. So as soon as that makes that cross, you can enter long, as long as it had not made a low lower than bar 2. So in this case, this is actually bar 3 with an entry right here because of those reasons. But if it had opened and then came down and made a low lower than bar 2, then all systems are off and then that's no longer bar 1 and 2, and this becomes a tentative bar 1. So that's how the 1, 2, 3 interpretation happens. But what I like on this is that we've got an upward channel, higher highs and higher lows. That's good. The RL10 bottoms out here. Now, when this PSAR, which is marching downwards, once the RL10 crosses through that, wherever that may be, then and only then the PSAR flips, and wherever it flips, it will flip and print to right here, because that's the lowest low of the RL10 on this move downward. And so the PSAR flip automatically goes to that bar, and then the PSAR flip will be here, and then that becomes the trigger for all future collapsing dragons. We would like to see this thing continue to go, and then the PSAR will start marching up, all the way back to 480 if we can have our preference. Okay. But so far so good. The 5-day volatility range, that's the 5-day range right here, is relatively small compared to the size of the 10-day box. The 10 and the 30 is still there. This is the 30 bar box, and you can see that sets our template for like short-term swing trading. And we can see that highest high. We can see the peak of the dragon, the peak of the RL10 up here. Those are all price targets that once it gets through these little price layers, that would be the price value ladder to the upside. Each one of those would be a checkpoint, like a road sign saying, hey, things are getting better. Each little checkpoint adds a little more confirmation. But you notice we're making our entries and making those turning point calls down here so that if it does pay off, we actually get paid large through here. So we learn to make decisions under conditions of uncertainty when the reward to risk ratio is favorable. So you have to become comfortable with being uncomfortable. In fact, the feeling of uncomfort or discomfort is an indicator that you're in the right region for entries. It should always feel awkward. But what we got to learn to look at is if we can minimize the size of the risk boxes, then the reward box is correspondingly better, and that's where we get our favorable reward to risk. And since we want to get short, if this thing does fail, we want to be short there. The sooner we can get long, the better. So if I can get long inside here and it fails, well, I'm into the trade that I want anyway, which is the collapsing dragon, and then I'm short, so I'm in the trade that I want to be in. But if it doesn't do that and it actually works against all the odds, then I get the maximum payoff. So the reasons to use a minimum manageable risk box is that you get the best reward to risk ratio, and you're getting closer to the critical state where you don't have a directional bias. I hope it works. That would be nice. But if it fails, then I paid the minimum amount to be wrong or to be on the wrong side of the trade, and then I just reverse into the trade that I actually want. That's the essence of that supported spring crossing trade. Check or hold. All right, now this is the 30-minute market. So this is now what the 5-day box looks like. And this is our 10-day box. Now what you'll notice is that this long orderly slide was part of the primary trend. You had one burst of buying on value, but there was no sustained movement. And as quickly as it went up, it quickly collapsed. But then it held support once, twice, 3 times. And now, this little buying pressure in here is what kept it from failing. And then finally the PSAR flips, and that's enough to trigger the next sustained rate of buying. See, what's happening in here is that every effort to make it go down is being met with strength to buy it back to that level, which results in that sideways chop. And then when the bears are done, hey, I can't make it go down any further. Maybe they jump over onto the side of the buyers and say, well, if it's not going up or going down, maybe it's going to go up and we can help it. And then I think what happens is they stop trying to short it. They get on the side of the angels, and that thing responds immediately. So now we're right at the crucial price level where this test failed. And the last time it was over in here, it failed, but then it didn't fail. And the PSAR flipped. And it's making a nice run up. So if it can break through this 5-day high, then the next price level is about here at 405. Then maybe this R10 wiggle at about 410. And then 415, 413 is in play. So cautiously optimistic, ready to follow price in either direction. Because if this fails through here, I'm short. And then adding a second position here when it breaks through the collapsing dragon, and that would be a large move. Because there's so much support here, which if it collapsed, that means all these people no longer were buying and they were getting short. So that's why we're in a really important critical state right here going into Friday. All right. All right, let's take a look at the sectors now. See how we did today. There we go. All right, so the S&P was up a respectable 0.65 today. The best performer, the only one that was better than the market, was the Russell at 0.83. The other U.S. indexes, diamonds and the Qs, were within an arm's reach of the S&P at 0.6 and 0.52. The lagging indexes were emerging markets down a half and treasuries off 1%, back down under the key price level of 110. So that is actually a vote to the upside. Here's the break-even line for real gains and real losses. On the downside, the underperformers to the S&P, you had energy, again, blended commodities, tech, real estate, the FANGs, agriculture, Brazil, lumber, staples, the other lumber, Simon Property Group, commercial real estate at minus 0.9, marijuana and VIX off 1.78. This VIX being sold at a discount is a vote of confidence to the upside for tomorrow. The individual companies, the targets that were weaker, Apple continuing to disappoint at minus 0.96. Let's see what else we got. Microsoft disappointing at 0.17. Intel 0.33. So some disappointments in energy and tech. Now what's reassuring is that this market has held support and has had the next rebound, 2 or 3 day rebound here, and it's not tech leading the way. So what happens if tech picks up the scent and starts to run? It's going to be more goodness tomorrow. So tech will be the early watch to see what we can see. S&P, again, baseline 0.65. We have oil, lithium, clean energy up 0.8. Mexico, discretionary materials, Aussie dollar, oil exploration, wheat and precious up to from 0.8 to 1.2. Finance 1.76. Bitcoin 2%. ARC Innovation 3%. S&P Biotech 3.1, uranium, Arc Genomics 3.5 and 3.6, Ethereum 4.4. Individual companies that did well. Another strong day for Rivian and Coinbase at 11 and 7%. My favorite, U.S. Steel, 4.8%. Very strong follow through from yesterday's major move, and the continuation trade on that one was excellent. I was all in on that one with large size, and that one paid off. In the financial disruptors, you got Squarespace at 4%, Robinhood at 2.5%, Alcoa 2.5%. So there's Alcoa and U.S. Steel, and here's Cliff. So all our metals are back in play. Those are all the metals. You had Tesla with a good day at 2%. Texas Instruments in the chip space, 1.5%. PayPal, all things good. Devon Energy bucked the trend of the energy being down. Devon Energy was actually up today, which is healthy for it. So when energy comes back online, you would then really expect Devon to do well. Because if it can be up when energy is down, then when energy reverses and goes back up, we wouldn't be surprised to see Devon really step on the gas pedal, if I can say it that way. All right, let's shift to daily reports. Kids wore me out in soccer today. Oof. All right, sniper trade of the day for me, for U.S. Steel. Here was the close yesterday, a 1-2-3 entry. I looked very strongly at entering here, but I decided to let the PSAR flip and let it build out the normal risk box, and off we went. Standard exit. I thought hard about the entries in here in the pocket, but as it turned out, the PSAR flip was still in the pocket. That was a scratch. I treated this one as a COTA 2. PSAR flip, standard risk box, standard exit, and that was a pretty good day at work. This one returned 1, 2. This one was a scratch, and this one returned 1, 2, 3, 4. So plus 6 today in U.S. Steel, and more to follow because the other metals are coming online too. So that's a good day at work. We've seen the health checks. So back to dashboard number 1. Bearish normal. Strong 2-day move has now improved the 10 and the 30. The 90 is well above the midpoint, and even the 270 is getting better. We are still reminded that this is risk off, so still critical state to the upside or downside, which is good in both directions for short-term traders. The min pains, Walmart, JP Morgan, McDonald's, Johnson & Johnson, and Pfizer. Max pains remains 3M, Alcoa, Intel, Caterpillar, and Boeing. Situation normal there. Dow 30 tactical. Only 2 dojis today, 3M and Alcoa. And I like both of those. That 3M has stopped failing. And it's got a small range day, so that could be the strong sell-off. Yesterday was a nice little bounce. Today was a doji that gave back a little bit. But I like the fact that it's got a range compression with such a strong upside of 9-to-1 off the little doji. So there's 9 units of reward to the upside to the 10-day high. And if that doesn't get your attention, I don't know what will. Tesla, good day. Pfizer, JP Morgan, good days. No breakouts on the indexes, so we're trading within the day inside the standard look back periods. Uh, ETFs, almost everything, no surprise. On an auto framer, no breakdowns or breakouts today. So this is emblematic of an actual reversal, that it's back inside the 10-day range and moving off the bottom towards the top. That's actually a healthy sign, particularly when the VIX and treasuries are both down, and some of these defensive sectors like gold are suffering as well. So finance, healthcare, those had the leadership today instead of tech. So let's look for more of that out of those two guys. When you get up days in a bear market and tech is not leading the way, that's telling you that that is value players coming in and getting some inventory after a selling regime. That's a good thing for the upside. 3M at the top of the list at 9-1. Oil and emerging markets, Alcoa and oil exploration, Intel in the chip space, the tech sector, Microsoft at 3.5-1. You got to love that long term. I think you have to. Yeah, all good. Intraday or the daily squeezes, I should say. Oil exploration and 3M. So I like that about 3M. For the same reason I like a 9-1 reward to risk ratio. That's why it was a doji today. It was such a tight squeeze that's ready to pop. Sniper headquarters, Comcast and 3M are the Godzillas that have wild volatility on the 5-day. VIX and Treasuries, quiet Godzillas in the making in our tactical set. More symbols back into the fireworks and popcorn setup, where the scores on the 10-day, 30-day, and 150-day are all in the top 10%. I especially like ones that are extremely quiet in that regard. That they're not. There's no profit taking in those. Those are postured for big up moves. So I think you got to pay attention to that set. The fence sitters. These are the ones that are at the 50-yard line in tight range compressions. That's what all of that quietude means, and that means breakouts from here, either to the upside or the downside, have large multiples. Even while the price stays inside the trading range, there's enough room to the extremes of the trading range that you're getting 2 or 3-1 ratios in either direction. So that's what you want for a straddle or just to follow price. And the fact that we're in a bearish means that we're going to be all right. Let's see if we can't look at 3M. My brother says this is must-see TV, so we'll look at it. He did 20R today, so I guess we're going to listen to him. Going through TC2000 to my standard sniper setup for the S&P. Quick look at 3M. That's the intraday, so after a gap down, this was just never sold off further and established a nice baseline on the intraday. That's good. That's real good. I'm going to jump up to the 30 minute, so multiplying the 3 minutes by 10 so I can take a look at that. We'll go take a look at the 30 minute now. That's a pretty good thing. We have a, after this big sell off and stable, one second leg down, SSC paid off, held support higher than the previous low. That's caught a 2 all day, and it's hitting caught a 2, ready to break out. Now we got to see it get above the hump of this dragon, and if it does, it's right back up to the 5-day high, and if that breaks, this whole resistance level breaks, and then the next stop is up in here, because this was such a harsh sell-off. There's no resistance it has to plow through. It'll run up through that as fast as it ran to the downside. It's not until it gets in here, the last time, that there was a big pause. So this is a really favorable coiled spring, and you can see that we're not risking much against the possibility of a 9-to-1 reward to risk ratio back to the 10-day high. Oh yeah, and it's got a 5% dividend, so of course people want to buy it while it's on sale. Great American company. So that's how you stack factors in your favor. 3M. Among the most volatiles, there's 3M for you right there. The fact that it's among the most volatiles, but today was small volatility, that's the pause, the consolidation, ready to expand. That's a good thing. That's real good. So I'm looking at all the ones that are in the green on the 1 day. That's good. Over on the most quiet, we're seeing very few that are breaking out. This is not much of a breakout. It's not even in the green. That's just normal ranges. So it's the jumpy ones that are already starting to jump. These other ones are kind of like the quietude is in the wait and see, because why not? It's a bearish market. The people that own it already own it, so they're not in a hurry. So it's the ones where you're seeing volatility is where the price action really is. So REGN, MKC, Campbell Soup. I'm looking for those volatility moves in there. So that's a way to find the movers early. There's our auto framer for the tactical symbol set. These are the sniper stats for our tactical symbol set, sorted by the 5-day volatility. Still being dominated by the winter, so we still have a buyer's market, and we're ready to go short instantly if the market support is violated. Perfect conditions for a short-term trader without a directional bias. There was actually some broad-based buying here on the 2 days. The last 2 days have been some recoveries. There's XLU. McDonald's continuing to dominate. That's all it's doing, is just crushing. I like this move in Tesla at 130 and U.S. Steel at 147 on the 2-day NDX. The strongest 2-day mover in the tactical symbol set is U.S. Steel. That's why it's on my short list at the very top every day. This is the sign of the market trying to put in a base. We'll see if it can now clear that and make that move back to 430. Critical state on a Friday. We should expect to see some large range moves tomorrow. And then we'll be interested to see what the posture is going into the weekend. How much are guys willing to hold over that weekend? All right, that's everything I want to look at on the daily. Let's go to the traders today. Uh, for Tim, just great work again. I think you're about ready to do a histogram review of your trading package since you've come back from your vacation in early August. I've sensed a tipping point there, and I think we want to confirm that by taking a look at some stats. It's time to do that. All right, let's see where we're at here. This is Tim on crude, 3 minutes. Quick reversal. Then a slight gain. I think we might have gotten the re-entry a little sooner than here. That's a good stop and reverse. Good payoff. Good stop and reverse. You got paid on what was there. I think this short was a little slow. That should be done here. That's a good way to cut that on this side of the dragon. Then I'd like to see you get the flip either here or right there. And then you're not chased out of that position and then have to re-enter here. So that little delay caused you to have to take that loss and then miss that move. So if you can get that a little sooner, because that's caught a 2, that's rising lows, then you're going to get paid once, twice, 3 times. But even so, 1.4, nothing to sneeze at. That's good work. Some more with Tim on this is the hourly, I think. Yeah, hourly support and resistance levels. So he's marking off those key price levels to know where his tactical trade is and where that reversal has to happen to the downside. So he knows those key price levels from the higher time frame. Luke with the 5-minute Aussie comes back ready for bear, gets the Z3 pinch breakdown. Here was a second position possibility in either one of those, but that's a nice way to get started at 3.5. Perfect re-entry on that little R10 wiggle and collapsing dragon. I think we gave back a lot here, but that probably was a surprising move. At least you got paid. I would have been tempted in here, and you'd probably get paid somewhere around in here. That's a good SSC. That one also caught you by surprise. I think you probably bailed on it there and said, just let me relax. That would have been hard to resist. On the other hand, that was such a sudden shock, 50% retracement and sell-off. Why not just let it settle down, then get an orderly PSAR flip, standard risk box. Here was a Kata 2. That was actually a Kata 2 that was possible. I think when it rolled over, he decided to get paid 2, and why not? But there's a re-entry. Ooh, but he was not in the market, so all is forgiven. He comes back here just in time, but boy, did that cost. Oh, scratch, double bottom, PSAR flip, crushing it, 8.5R. Good day, good recovery. He's back in the saddle with the eye of the tiger. Good job. Less on the New Zealand. This is just so good. Orderly sell-off. Cash. Resumes. Short. Gets paid. I'd have been tempted here for more on the short side. But I like the SSC. Quick exit. I think you could be short here, but even so, you get short here and get paid. You get paid. The PSAR flip here would have been tempting to me, but you got paid, and that's 2R. Good shooting, Tex. Arch, +2 for the day. Gets paid, gets paid. Oh, away from desk. Stop being away from desk. This is a good reversal, good scratch. And so that's two really good trades right in a row. You played it, it wasn't there, so you scratch, you cut it. You tried the reversal, you cut it. This was failure to fail, so you cut it and then got in and crushed it and then bring home two. Yes to my brother. Here's Bill on this is the S&P on 10-minute. So you don't got to be a maniac chasing. Here is the PSAR flip, open and gap down. So he tries it. It doesn't work. Quick cut, stop and reverse, and off we go. Gets the second position when it is well clear of the PSAR flip. And then as soon as that rolls over and crosses the baby dragon out, so that half pays for that half, net 7, and on the golf course by noon. Standard work. This is in U.S. Steel. He gets the same one I got this morning, but he's timing it with his mechanical second and third entries. Sees the peak. There's the cross. There's the exit. There's 12R and one more 13R plus 7 from the other one. 20 for the day. In 2 hours, going to golf. Ladies and gentlemen of the jury, I rest my case.
Is now good, Ken?
Devon Energy from Woj. It just wasn't there today. There's the long. That could have been the short, but you would have taken an extra loss, and then this short would pay off. So I think there's something in here we could get, and that's your stop and reverse. We should get paid on that. So I think there was some market bias, some directional bias in there that's a little problematic. We were slow on getting that re-entry. So, we gave back that opportunity. On the other hand, Tesla, your timing was right on the mark. This could have been a little quicker, I think, here. But still, that's pretty good. You got paid. He considered the short, waited for the confirmation on the collapsing dragon, then got paid. Well, but we left too much on the table there. We should be out at the 1, 2, 3 exit on an up day in the market. Good scratch. The re-entry should be here, and that's a scratch. So even that's 3R. This should have been about 7 in Tesla if we play that a little more precisely. So study those. This is Woj on the Aussie. Another 2R. 3.5 for the day. Getting it done. Starts trading. Sees the compression zone. PSAR flip. Standard risk. Exit. Meeting. We've had this discussion. This is where we got to be short. And that's our SSC long. So 2R, which could have been 5, even without the meeting. So you're getting what's available. All right, so this is Woj. I asked him to take a look at. So this is 500 trades. Let me see where we're at. This is 2045. Yeah. So this is the last 500 trades. And I want you to notice some important things. So the first thing that I'm looking at is over a 500 trade period, the worst trade that he's got is -1R. So it is fair to say he can estimate a manageable 1R risk and doesn't take losses greater than 1R. So in the long run, if you just say, look, the 1R gains and 1R losses, the difference in his histogram is that he's letting winners run and is strict on not taking losses. On the 500 trades, he's got 41% to 43% win rate. That's a coin flip, and it pays 0.95 to zero point 0.6. That's a coin flip that pays 3 to 2. Heads, you win 3. Tails, you lose 2. Now, how many times a day do you want to trade that game? You want to trade all of them. So he's got a strict left-hand side. Between -1 and +2, he's got a normalish looking curve, and he's exposed himself to potential fat tail winners. Those are the 3 things that we look for. Controlled risk, normal distribution-ish between -1 and +2, and then fat right tails. That's looking good. So that's what the last 500 trades are. But now as he moves in a little closer, we're going to see that over the last 100 trades, his win rate, remember the last time his win rate was, 0.41 to 0.43, and that paid 3 to 2 winners to losers, right? But now in the last 100 trades, his win rate is 0.54 to 0.33, and that's a 3 to 2 win rate times a 3 to 2 payoff rate. So this is a 1-to-1 ratio that pays 3 to 2. This is a 3 to 2 win ratio that pays 3 to 2. That is huge. Histogram has the same features. And now on his last 50 trades, we're going to notice that his win rate remains about 3 to 2. And his payoff rate remains 3 to 2, but his wins are bigger. And his fat right tail's getting fatter. So he's shifting that stuff to the right. And he's not getting outrageously large wins. Like this didn't happen because, he got a +40 win, which masks all the losing. No, this is manufacturing right there. So a 3 to 2 win rate and a 3 to 2 payoff rate, you want to trade that one all day. Really nice work. And as we've seen, there's room for improvement on his standard production model. This is really good work, bud. All right, let me turn this over to my brother. He wanted to, I believe, you wanted to do a screen share and do some discussions. Brother of mine. William.
Yeah, I'm getting there. You
All
got
right,
your
good.
ears on?
Yeah, go.
Yeah. I'm trying to see share screen over here. I got QCOM, which is something I've been looking at. It's similar to 3M. It is
Are you
really,
sharing the screen?
I think so.
Not yet.
Screen 2. Can you guys see it?
Now we're there. Go.
Okay, QCOM, just one of my, pet things going on here. It is similar to 3M. So if you're looking for something a little different, QCOM is way down at the bottom, and it is compressing from this. It compressed before when it broke out. It had some really good action, all in a couple days. But I wanted to go back to 3M for a minute. The reason is this. When I wanted to talk about the 2R battle drill, go back to your foundations course, please, or check out the one that I posted. And even if you do this on paper tomorrow, sorry, trying to, this is, you can see that I have some gaps in here, but I'm putting on a line. All I do is I put a line, right? And say, when I get above 2R, which is what the 2R battle drill, this is back from 2015, guys, that Ken brought this up. And he said, hey, when you get above 2R, the first thing I want you to do is to put a line there. And then put in a stop limit, automatic buy, and it makes you deal with the next purchase. That's what this was. When I did the trade today in X, that was the only, Ken and I essentially saw the same things, and all I did was apply the I must have already gotten rid of it, but all I did was I applied the 2R battle drill. Oh, here it is. I'm sorry. So all I did was apply the 2R battle drill in this area. Okay, that's the only difference between the two. Okay. You get there, you can see the gaps between the positions. That's just the lag time to fill. I have a line, I do a stop limit, automatic buy, boom. I'm not, once, what you find out is when you do this, you don't worry about that first 2R anymore because you're worried about the second R. Then if you have an all-out scheme like I do, okay, well now this was actually almost another R that it came back because I had my fail safe was a 80-cent stop. But I could have gotten out in here anywhere, but on a 10-minute chart, it's kind of hard to do that. Once it got to that threshold of giving back that 2R, I said, no, forget it. Because why? Because I can always start over. So I waited for it to retrace. It came back. I had my my cross of the MLR10 and the baby dragon, and then I had a local MMRB up from the acute bottom. I just took it. Then I set the MMRB trail and I went to golf. So on a 10-minute chart, my new student was like, well, why would I ever trade at 3 minutes? That seems really chaotic. I said, I don't know. He likes 5 and 10-minute charts. I like 5 and 10-minute charts. You don't have to deal with all the shenanigans in between, and you can still make money. It's a lot. I was editing video yesterday. Today I just went to golf. So that's my plea to everybody. I shudder to think what Woj would do with a 2R battle drill automatically, and see what that would do to his the fat right tail. That's me. That's all I got.
Yeah, so here's what I want to say about the psychology that I want you to have. So you can either decide to think about should I get in and where, and contend with the greed modified by fear. So you're being torn between greed and fear about should I get in or not. And then if you get in, then you got to manage the stop.
Yep.
But if you put the automatic entry in by a mechanical rule, and then you get surprised into the trade, 100% of the energy that you were spending on fear versus greed and should I and shouldn't I, 100% of that energy is available for you to react like a maniac to get your risk out of there. I
Yep.
would like to have you fresh and energetic about managing the risk you have
Yep.
than trying to monkey around with should I get in, should I not get in. Let the rule put you in, and then let your exaggerated and fine-tuned sense of fear let you get out fast. So if you got in by a rule and it surprised you, you're not emotionally tied to that entry. Like that
Yeah.
wasn't the result of a deliberate process. You got surprised into it. You could say your worst self put you in, and now you're just going to make sure it's not a disaster, and you can trust your monkey and your energy that's now ready to just get my risk out. So now there's no uncertainty whatsoever. You are in execution mode and you're not overthinking it. You are simply responding to the price. And if it starts to go against you, you're happy to get out right
You just
away.
get out. You
So
be, it's a,
so so in terms of where you spend your energy, where you spend your resilience at, use that energy in a positive way to manage your risk and get it out of the trade, as opposed to suffering through the entry. The entry's the least important one anyway. It's how you manage it from the moment of entry onward. That's where you want to spend the energy once you're in the trade and then managing it correctly. Get rid of all the psychic torture of should I get in or should I get out. That's why that mechanical entry
yeah,
is so powerful. And it allows you to not be emotionally connected to the decision to get in.
it's just a rule.
Yeah.
You're a mechanical trader. What the thing that popped into my mind when you were talking, Ken, is become a fireman and not a monkey.
Yeah. The
You
monkey
become the
put you in.
fireman.
You can blame
Yeah,
the monkey. Who let that monkey loose? Oh, all right. I'm a
yeah.
fireman
So now you're
and I
just the fireman.
protect him. The
Yeah,
fireman is the most selfless servant in the world.
yeah.
Be that guy. Use the strength of the fireman to save lives. All right,
I
that's
mean, if you guys aren't convinced, please at least try it on paper.
yep.
See what happens.
Or take a look at that. I mean, with my standard rules, thinking about it, I'm 6R in U.S.
Yeah,
Steel.
you and I did the same
It
thing,
was the
Ken.
same trade, same location, and he pulls 20 out when I get 6. So don't listen to me. Listen to him.
No, well, but you're listening to Ken
Yeah,
from
I'm teaching him. I'm just
2015.
saying.
I
Yeah,
know.
I'm telling
Well, this is I just look at it different. That's all.
you.
Fresh eyes. I don't know.
Well, you're younger and you're hungrier.
Yeah. Yeah.
I'm an old
All
sloth.
right. I turn it back to you, my brother.
All right, folks, that's all we got. Get it published and posted. Roger out.
Good night.